Hey folks, see Rachana Ranade here. If you have been following our channel, I hope you have seen all of these three videos wherein we focused on war, waves, and winners. Now, if you're like, when did these videos release? It means that you're still not subscribed to our channel and hit the bell icon. Please do that so whenever we come up with more and more informative videos, you get to know about them. Well, today's video is with the similar theme of war, waves, and winners, but this time from a different perspective. And why am I saying that? Because till date we tried to understand what could be the impact of war situations on the Indian stock market, even when India was not even directly involved in any of the wars. But then I'm sure you might be thinking that with USA directly being involved in the current war, how could it impact some stocks which are listed on the US stock exchange? So in today's video, we are going to try and analyze the impact of geopolitical conflicts on US defense stocks. We'll try and analyze the impact of geopolitical conflicts on US AI stocks and the impact of geopolitical conflicts on US oil stocks. Video is going to be extremely informative, so keep on watching the video till the end. Well, I've said this many times, but let me repeat again. War can't be justified. It will lead to a lot of losses in human lives. But then why do we discuss such situations on our channel? Reason is very simple. We focus on the finance angle. We try and analyze, because we all are students of financial markets, so we try and analyze how geopolitical situations impact stock markets and how do they impact different stocks which are listed on the stock market, right? So with that said and done, we have to understand one point, that whenever war or conflict involving the US or its allies begins, three major things happen immediately. Number one, governments increase defense spending. Second will be weapons or related inventories start getting depleted pretty fast. And number three, NATO and the allied nations, they also boost military spending budgets. Now, why am I saying this? Is there anything which I can back up this entire points with? Answer is obviously yes. See, whenever I say government increases defense spending, what happens is, see, wars will require missiles, they'll require fighter jets, drones, radar systems, ammunitions, logistic systems, and so much more, right? And in such situations, what happens is government gives contracts to certain US defense companies. See, but whenever I'm saying that government increases the budgets, does it really happen or not? Let's check out some data points. So for that, I am on IND Money. I'm just going to US stocks section. And here, if I were to just scroll down, one point you can see that US stocks by industry, it's sorted out pretty well. Here I'll go to defense stocks, and what information did I find out here is that for those looking to invest in US stocks from India, the US defense sector stands out with over $901 billion allocated for 2026 by the Congress, with President Trump calling for a 1.5 trillion military budget for 2027. Now, this is more than a 50 percentage increase in the military budget that President Trump is calling for. So understand, whenever the overall military budget increases, they are going to place orders, but they're going to place orders to whom? For that, you have a list of defense stocks, and you can see also all these are very clearly bifurcated with the market cap as well. You can see large cap companies, you can see some mid cap companies, you can also see one small cap company listed here. So all these companies are nothing but they are a list of some defense stocks in the USA. Now what happens is that whenever government has such big budgets, they will ideally give orders to all these companies, and investors anticipate that billions of dollars of new orders will flow into these companies, and that is the reason why interest in these stocks increases. Now, coming to point number two, weapons obviously will get depleted whenever a war starts. Now, if I were to talk about Russia-Ukraine conflict, thousands of missiles, artillery shells, drones, all were used. And what does this mean? Obviously, governments would want to replenish these stockpiles. When they want to replenish these stockpiles, obviously what are they going to do? They are going to sign up for multi-year defense contracts. Now, if I were to just quote some examples, javelin missiles were used in Ukraine. Now, who had produced these were produced by the US company Lockheed Martin and also Raytheon. Now, what happened here is that the result was nothing but investors again would expect long term revenue growth in these companies, because more and more of such missiles would be used, more and more orders would be placed with these companies, is equal to their order books will rise, is equal to their revenues will rise. Okay. Coming to the third point, which is about NATO and their allies boosting military budgets. Do I have some data for this as well? Answer is yes. Here you can see about the EU numbers. This very clearly says that in 2024, defense expenditure rose to 1.9% of EU member state GDP, up from 1.6% in 2023, and in 2025, it is expected to reach an estimate of 2.1%. Even if I were to talk about one more example about German lawmakers, they approved 100 billion euros in military revamp. So all in all, what can we see in this entire picture is that after such major conflicts, NATO countries will also increase the defense spending. New weapons procurement will begin. Military modernization programs will accelerate. So all in all, will this lead to bigger order inflows for such companies and bigger revenues for these companies? Answer is yes. Now let's try and understand what has happened to prices of defense stocks historically during war situations. See, what happens is step number one, there's a pattern, right? Step number one, tension starts to build between two or more nations, and that is where defense stocks start to rise. Remember the logic that I told you just in the previous section, right? I told you that whenever there is a tension, ideally government would want to ensure that they are well equipped, so orders start to flow into defense companies. So defense companies will start receiving orders, their order book will rise, their revenues ideally will rise in the coming few months or years, whatever. It will lead to rising profits, and rising profitability will lead to increase in stock prices. Okay, so first thing is tension builds, then actual war starts. Typically during such situations there can be sharp short term spikes. After war begins, what happens during the war is that ideally there'll be some sort of consolidation or a gradual up move. Okay, or if the stock has already risen quite a bit, it could be some sort of consolidation or some sort of selling as well. But when the war ends, typically such stocks either stabilize or correct if they have moved up pretty sharply. Okay, now with this pattern, now let's try and understand what happened with few stocks during war situations. First, let's take example of the Afghanistan war, which started in October 2021 and ended in October 2001 and ended in 2021. Everyone remembers the 9/11 attack, and immediately after the attack, the US financial markets were closed from 10th September to 17th September. And when the markets opened, a stock, just to give you an example, Lockheed Martin, that went up by almost 20%, right? But does this mean that when the war started in October 21, the stock kept on rising by 15%, 10%, 20% every single day? Answer is no. What happens, as I told you, there'll be a short term spike, there'll be a gradual upward movement, and after or during the war, or whenever the war starts to cool off a little bit, the stock prices will also cool off a little bit. And that's how the overall defense spending cycle plays out. It's not only about the war scenario. Okay, now let's also take an example of the Iraq war. Iraq war started in 2003, March 2003, ended in December 2011. I've given four examples here, four stocks: Lockheed Martin, RTX Corporation, General Dynamics, and Northrop Grumman. In all cases, I've given the dates, the prices in March 2003 and prices in August 2008, and I've also calculated the CAGR for you. You might be like, Rachna, the war ended in 2011. Why have you taken 2008? Reason is very simple. You know what happened in 2008? It was the Lehman Brothers crisis, the subprime crisis, post which the entire markets collapsed. So if I take the downfall into consideration, here the numbers may seem a little bit different, but primarily the war overall cycle led to a CAGR of almost double digit in all these cases, right? Now let's take one final example, which is the Russia-Ukraine war. This war started in February 22. I've taken the current market price and the CAGR in this case as well. Same four names, and you can see in this case also all double-digit CAGRs during the war time frame. So by now, I hope you are very clear in your mind that the drivers that we discussed, the pattern that these stocks follow, the upward movement that these stocks see. But then, is it only defense stocks that come into picture? Answer is obviously no. With the current modern warfare, of course, AI stocks are also going to come into play. So in the next section, we'll talk about AI in modern warfare. Wars today are not fought only with tanks, missiles, but they are fought with data, AI, and software. And that is exactly why companies like Palantir Technologies react to conflicts such as the Russia Ukraine war. Now, let's talk about few key pointers here. The very first one is how modern wars are now also called as data wars. Because if I were to talk about older wars, something like Iraq or Afghanistan, intelligence came from satellites or even human spies. And then you can imagine how much time, maybe hours, days, how much days it used to take to just analyze the entire information. But in modern wars like Ukraine or even the ongoing US Israel versus Iran war, we are talking about satellites, drones, radars, battlefield sensors, intercepted communications, cyber intelligence, and so much more. In this entire scenario, I personally believe that there will be a massive real time data that will be getting generated, and AI is required to actually analyze this every single second. And this is exactly where companies like Palantir come in. Now, we'll just try and understand what exactly Palantir does in such war situations. Palantir basically builds battlefield intelligence softwares. Now, they have two different platforms which are pretty much famous. One is Gotham, which is used by military and intelligence agencies, and the second one is Foundry, which is like data integration and AI analytics. Now, let's take an example of how an AI software was used during the Russia Ukraine war. Now, what the software was doing is that it was combining different satellite imagery, and it was trying to detect whether there were any movements of enemy tanks. It was also trying to predict where the missiles could be probably launched, and it was also suggesting what could be the optimal counterattacks. So instead of a general analyzing maps manually, AI software was providing recommendations, and that too instantly. Now, Palantir in Russia Ukraine war, if I were to talk about the stock price, on 24th of February 2022, its stock price was $9.75, and the current market price is $150.95. That translates into a CAGR of 98.36%. So, am I saying that this stock rose only because of Russia Ukraine war? Answer is no. They have many more businesses as well, because of which the stock price rose to this extent. But all in all, to wrap up this entire section, let's try and understand why investors are really interested in defense AI stocks. As an example, Palantir. Basically, AI is right now improving the overall weapons efficiency. Governments are also focusing not only on spending on hardware, but they're also spending more on software warfare. And ultimately, military AI spending is also exploding to newer levels. So I hope in this section you have very clearly understood how AI stocks are being perceived in such situations. Well, by now, I hope you have understood how geopolitical situations impact defense stocks, how can they impact AI stocks. Now, let's turn our focus on oil prices. And for this, we are going to take an example again of Russia-Ukraine war. When this war started, WTI crude oil was trading in January 2022 at somewhere around $75 to $85 per barrel. But after the invasion, oil surged to $120 to $130 per barrel, and in fact, at one point in time, it briefly touched $139 per barrel. But why did this happen? Because the markets feared that because of this entire war situation, Russian oil exports could get sanctioned. The entire supply chain disruption would happen. The supply to European countries could get hampered, and overall energy shortages could exponentially increase at an entire global level. And why am I saying that? Because Russia normally exports about 7 to 8 million barrels per day, and if this is the quantum, even a small disruption can definitely create panic. But panic at one end is going to have an opportunity in some other area, and that opportunity I'm talking about in US oil stocks. Let's take the example of how certain oil companies actually saw an increase in price during the Russia Ukraine war. Let's take examples of ExxonMobil or Chevron or ConocoPhillips or even Occidental Petroleum. All stocks that you see on screen right now, they have given more than 50% returns, almost 50% and plus. In fact, Occidental Petro gave 200% plus return. This is absolute return that I'm talking about from December 21 to December 22. But that is massive, right? So, all in all, I hope in all these three sections of the videos, you have understood how defense, AI, and oil stocks get get an impact because of different geopolitical situations. But just because you feel that this is something interesting, are you going to directly jump and buy such stocks? Answer is obviously no. Ideally, what a good investor should do is do more research. But to do more research, what could be done? So just to give you an example, let's say you check out any stock. If you feel I want to do more research on Lockheed Martin as an example, what I would have done, I would have definitely checked out its fundamentals, something like PE ratio, PEG, the revenue numbers, return on equity. I would have surely checked their profit and loss account, not only quarterly, but I would have checked the entire revenue growth, EBITDA growth, profit growth. I would have checked their cash flows. And one interesting point here is that you can also check what are the analyst recommendations. You can also check the sentiment. And after doing such a detailed analysis, if a person feels that okay, I might want to just try and invest a little bit of money, through this through the IND Money app, you can start investing with as low as even 100 rupees, because fractional investing is possible. And if you were to start an SIP can be started with as low as 500 rupees. Now, before we close today's video, I'm going to give you a homework. Right now on screen, you can see a list of stocks which comprise of defense stocks, AI stocks, oil stocks, and I've given the price of all these stocks as at 27th February 2026. Reason, we are trying to analyze what could happen during the Iran-Israel-USA war. The 27th Feb prices are given. Current market price I have given only for 5 stocks. The change percentage also I have given only for 5 stocks. What about balance? Balance is your homework. You have to just go onto the IND Money website, check the current market prices, put in the current market prices there, and check how much is the change. And that is how you analyze stocks, right? You see what has happened in the past, you go and do the fundamental analysis, then you see what is the current position right now. And that's how a good student of stock market keeps on studying in detail. I hope you enjoyed today's video. If you did, please don't forget to smash the like button. Please don't forget to share this video with your friends. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.